Hello everyone, it's Mark Barrett here from Property Tax Advice. Saw a very interesting discussion that took place on social media. A person wasn't paid their rent on time, and they've ended up deducting from the deposit that was made on the property for the rent that was paid. And the question was asked, when is it tax deductible? So I thought I would have this video and try to answer these questions. As always with social media, the question's simple. There's not enough detail in the question, and lots of the answers don't have sufficient detail. So that's what I'm trying to do here. Okay. Okay. Default position. If your business, so whether it's a limited company, whether it's in your own name, default position is that if your income, your sales are less than £150,000 a year, then you're on the cash basis. That is the default position. You don't have to stay on that position, but I'll explain the cash basis and then talk about what happens if you choose not to do that. So on the cash basis, we're going to make an assumption just for this video's purposes that the person is sole trader, they're in their own name, okay? And we know that the fiscal year ends on the 5th of April. Okay, so let's give some examples here. A person owes you some rent for March. They haven't paid it in March. They didn't pay it until, say, the 15th of April. Well, on the cash basis, you only account for income when the cash is received. So whilst the rent was due for March, it's not included in the accounts for March, for that fiscal year, because it wasn't paid until the next fiscal year, 15th of April. Okay, so that's fine. You only account for it if the cash has been received. But in the same token, you cannot claim for expenses unless you've paid for them in the fiscal year. So let's imagine that during March, you've had to replace a boiler. It's an existing tenancy. There's no argument about the tax deductibility here. Fine. You're replacing the boiler. The work was done in March. Absolutely fine. But you didn't pay the bill until, let's say, 15th of April again. Well, on cash basis, the cash hadn't left your bank account by the 5th of April fiscal year. Therefore, you can't claim tax relief for it. You've got to pay your bills on time in the year to make sure you claim tax relief. So the cash basis, you are only looking at what cash is in the business, what arrived and what left. For those of you who have some sort of accounting knowledge here, that means that there are no such things as debtors, people owe you money, or creditors according to your accounts, because you're only accounting for it on the cash basis. Does that hopefully all make sense to you? Okay, let's imagine you don't want to be on the cash basis. You want to be on the alternative, which is called the accrual basis. Now, the accrual basis, all you've got to do to elect to do that is tick the box on the tax return that says you're using the accrual basis. Now, that means the rent was due in March, even though it wasn't paid, is still included in that fiscal year, 5th of April, still included in that fiscal year's account, and you still got to pay tax on it, even though you didn't receive the money. Similarly, on that boiler repair, the bill was due, but you didn't pay it, doesn't matter. You still include it because you are on the accrual basis, which of course now means you've got a debtor's figure in your accounts and a creditor's figure in your accounts. People owe you money, you owe people money. Very simple. And actually very convenient for most people because, yes, okay, it does mean when you have work done in February, March, make sure you pay your bills on time, okay, promptly. But it does mean that you're only paying tax on that money that's actually come in or gone out the door. Okay, so that's the cash basis. Now, what I also wanted to cover was deposits. So the deposit. Tenancy is happening. We know that there's rules about how big a deposit has to be. You've got to secure it. I'm not going to go through any of those rules with you. You should know that. That's fine. So that money has arrived, but it's not really your money. You can't use it. It's got to be secured for the tenant. It's the tenant's money at the point of when the deposit is paid. That's why it's secured. So whilst that money has arrived, it's not included in your turnover because it's not your money. Does that make sense? Fine. Now, let's take the situation. Someone owes you rent for March. They haven't paid the rent in March. They've actually left. And they still haven't paid you the rent for March. but they've got a deposit. At that point, you say, well, hang on a minute. Shall I take the rent that's owed to me from the deposit? Maybe there's damages. Shall I get that repaired using the money from the deposit? That's the whole point of the deposit, wasn't it? Okay, was the money received? Yes, it was now, because whilst it was the tenant's money, it's now your money. So now you do include that element of the deposit. So let's imagine someone's placed £1,000 deposit with you. They owe you £350 for rent, £200 for damages, 350 plus 200. They owe you 550. You repay to them the 450, the balance of that deposit. That money's now yours, and you now account for it because it is taxable income. It's now your money. So the deposit when you receive it is not taxable. The deposit when you utilize it is yours to now use to supplement, to pay the rent that wasn't paid or to pay the damages is your money. There was also another quick point that was made when all this discussion that was happening, the labour of the owner. So that's not really the point of this video, but I thought I'd just quickly cover it. So you're a sole trader, you're doing it in your own name, you own the property, you rent it out, it's all in your own name, that's fine. You've gone in and you've cleared up the mess that someone's left behind. Is there a deduction for the cost of your labour? Well, no, there isn't, because your business isn't paying you. And if you say, well, my business will pay me then, well, that's fine. But now you as an individual have got lower profit from your tenancy because you've charged yourself, but now you're self-employed, charging yourself money, so it's taxable there as well. So the answer is no. There's no benefit to it whatsoever. You don't want to register as a self-employed cleaner up or after tenants. That's not your job. That's the business of the property rental. So you can't claim that relief either. Okay. So fairly quickish video, all about the cash basis for accounting and what happens with deposits. I hope that's been helpful. As always, if there's any questions you want to ask of a property specialist accountant, drop me through a message or an email. At the end of this video, there is a page which gives you all my contact details and my Facebook page, etc. Ask me a question, and if I can help you, I will try to. That's it. I hope you have a wonderful day. Take care now. Bye-bye.